Hello, my people. Good morning and warm welcome to the decoding of the ET Wealth newspaper. It's my absolute privilege to be contributing to each one of you on this beautiful morning. I feel blessed. On that note, let me show you. This is how the ET Wealth for this week looks, and the cover story is an eye opener. It's an absolute eye opener, and if you're somebody who doesn't read ET Wealth, I highly recommend that you go and at least read this cover story. You do not have access to the newspaper, just reach out to us and ask for the PDF. We have it and we will be happy to share it. So please make sure that you go over it. Ridhima, Neelu, Hira, warm welcome. Can I ask Ridhima, Neelu, Hira, any of you went over the ET Wealth of this week? Did you read it? Just say yes, no. If you did, if you didn't. I know Ridhima reached out to me personally and said she did. So I know that about Ridhima. Preeti, Neelu, Hira, did you guys by any chance go over it? Okay, Hira did. Okay, got it, Hira. That's amazing. What about others? Did you guys go over it? If not, that's also fine. It's just good to show up and acknowledge. Okay, Hira, got it. 2 articles. Okay, Neelu is going to do it with us. So Neelu, then the question is for you. Okay? Any of you who's read the newspaper, don't answer. People who have not read it, please answer. So for all of you who haven't read it, here's my question. So guys, imagine that a broker comes, an advisor comes, and he offers you a insurance and investment plan, okay, in which he's saying that for 10 years you pay 1 lakh each year. Okay, so for 10 years pay 1 lakh every year, and after 20 years you will get about say 22 lakhs back. So you pay 1 lakh every year for 10 years, and after 20 years you will get back 22 lakhs. Just by listening to this much about the scheme, do you think it's a good scheme to go by? Okay. So this question is for all of you who have not read this paper. Do you guys think, well, I know a lot of people who've taken such schemes. So that's why this question right in the very beginning. Yes, no, guys. Would you guys kind of try this plan out? Okay, Neelu, not at all. Why so? Why would you not? I personally know so many people who will just take up such schemes where you pay a certain amount for 10 years and 20 years later you'll get the double of it. Why would you guys not take it? Start sharing. Okay, Preeti, you wouldn't. Okay, it's a financial illusion. What makes you say that? Guys, please share. Why wouldn't you take this scheme? Neelu, okay, you would like to make far more rate of return. Okay, got it. Okay, Ridhima is saying her husband Rahul says, no, we'll not take it. Why not take it? So one of the answers we've got from Neelu is because there is a better rate of return to be made in other instruments. What else? What are the other reasons for not buying it? Okay, Ridhima's husband Rahul is telling her from the back that insurance and investment should be separate. Okay, got it. So we've gotten 2 reasons. One reason from Neelu is I prefer to generate a higher rate of return. The second is I would prefer a separate insurance and investment. What else? Okay. Hira is right. Hira is saying financial illusion it is. What else? What are the other reasons for not buying into this scheme? Anything else? Yes, no? Beautiful. Yes, Hira. Informs me you read the article. Yes. So guys, this scheme doesn't beat inflation. Got it. So Preeti is giving another reason that the time period when the money is blocked without any returns doesn't make sense to me. Okay. Money is blocked. Money is locked. Got it. So guys, here is the decoding which is already given in this paper and I love it. Yes, Ridhima, you're right. The 2 lakh value in 20 years will be way lesser. Absolutely. So let's go over this, and the newspaper is kind of sharing about a newly launched Child's Future Assured Plan, and this is by Aditya Birla Sun Life Insurance, where you pay 1 lakh every year for 10 years, and it promises to give you back approximately 22 lakhs on maturity after 20 years. Now, to any layperson, this will sound like a good scheme because you're putting in 10 lakhs, it grows and becomes 22 lakhs, which you get after 20 years. Often, I have personally seen a lot of women who come to us have such schemes in their portfolios. But if you actually carefully study this, the returns from this insurance saving plan is just a little over 5%. The inflation is over 6%, analysts say. So, the purchasing power at 5% inflation. Okay, guys, I'm not even taking 6%. This article is saying 5% inflation, about 22 lakhs that you get on maturity after 20 years will be worth 8 lakhs. So while you're investing 10 lakhs, what you're getting back after 20 years is 8 lakh rupees only. While the illusion, like Hira was mentioning, the illusion is that I'm getting 22 lakhs, but in reality, you're getting only 8 lakh rupees back. So where did this 14 lakh go? Right? Because it shows up as 22 lakhs, but actually the purchasing power of it, what you can buy with it at today's prices, okay, is only 8 lakh rupees. Now most of us, when we are buying such schemes, we fall short of this calculation. And that's what today's decoding is all about. It is about getting present, getting conscious of inflation in our lives. It's a very, very important concept, and we forget about it in our daily life. What is inflation? Mehengai. Yeah? When the purchasing power of money is reducing. So here is, let me share more numbers. Okay. At 5% inflation, in about 25 years, I retire in 25 years, guys. I'm 35 right now. I have 25 years to go before I retire. If the inflation is at 5%, 1 crore of today will be worth 29 lakhs only. If I don't grow it, if I just keep it in my savings, in my fixed deposits, say in post office schemes, or in any of the debt schemes where I'm making say 5-6%, or not even that, at 5% inflation, say I'm not doing anything with money. Most people do that. They only save money, they don't invest it. If you're one of them, then know that 1 crore rupees will reduce to 29 lakhs in the next 25 years. At 6% inflation, 1 crore will become 23 lakhs. about 7% it will become 18 lakhs, 8% it will become 14 lakhs. If you want to die poor, this is a beautiful strategy to implement. Work hard 8-10 hours a day, okay, or see your husband work hard and then not make that money work as hard. I know a lot of people who kind of stay away and feel that it is risky. Yeah, it is risky to invest in equities. Is it less risky to just save money? This risk doesn't show up. We're not present to this risk. We just risk that we will lose money, but actually we are already losing money and we don't even know that we're losing money. Like one of the education that I really respect told me, about 14 years ago, that there is an area which is you don't even know that you don't even know that. And this is exactly where it fits. I don't even know that I am losing money. I'm like this inflation is in that don't know space. So, got it. So, tell me, Bhumika is asking, how do we ensure we do not make this mistake? Come on guys, let's start talking. Shri, I love that smiley. Thanks for sending that in. So guys, please share. How do we avoid this mistake? What do we need to do? Or who do we need to be to actually go beyond inflation? Jyoti, this is page 2, right in the front, the cover story. So Neelu is further asking questions. Guys, before we jump to more questions, I want more answers. I want all of you to gym your mind. Most of you are our money gymmers. So I want you to gym our mind and tell me, how do we make sure we're not making this mistake? We're not taking this risk of our money really losing its value, its purchasing value. What are the answers? How do we make sure we're not losing our money to inflation? Got it. Okay, one of the actions Jyoti has come up with is to send it to her mom because she refuses to go beyond FDs. Jyoti, the best part is to save this video, actually not save, share this video with your mom. It is far easy for people to go over videos and that's why we're making them. Okay, so Jyoti has a plan which is invest in stocks. But Jyoti, so many people are so scared. They're saying, nobody, I don't want to invest in equities. So many people have so many myths, and especially women. What will my family say if I'm investing in stocks or equities? Would they approve of me? I'm not good in maths. I'm not good in numbers. There's so many challenges which come in the way. Got that, Ritima? How do we avoid this mistake is with financial education. Got it. Can you elaborate more on what is financial education? Shreya, we need to be disciplined investors. Absolutely. Be aware of the negative impact of inflation and investing in products that beat inflation. Preeti, beautiful. It begins with financial consciousness. And today, this decoding is actually about that. Because if we do not raise our financial consciousness, guys, we're not going to make financially intelligent choices. And this platform called Women on Wealth, which is just about you, is actually that. Raising our financial consciousness so that we can be financially intelligent. And this is the beginning of it. Please, can you all click on the share button and share this video with everybody, every woman, every man who has no clue of how inflation eats up their savings, and how critical it is for all of us who are taking the lead in becoming financially conscious to actually pave the way for other people to avoid this mistake and to actually move towards financial abundance. So can you guys just click on the share button and please share this video with the world, because I think this really needs to spread. And people really need to awaken themselves to the fact how their finances are getting eroded. Jyoti is saying it's all in your mind. Yes, mindset plays another important role. If you do not have the habits and the discipline and the tools, the daily rituals, the weekly rituals, the monthly rituals that you need to follow to actually make your money work for you, it ain't going to happen. So she's saying, come listen to our women share their stories on Mondays at 5 p.m. and understand how these women, who are regular women, can learn financial education, and so can you. Got that? Let me share more. So while I talked about a few crores, let me also talk about lakhs. So at 5% inflation, which is moderate inflation, value of 1 lakh by the time I retire in 25 years will be 30,000 rupees. And if the inflation is higher at 7%, the value of it will be 20,000 rupees. So while the amount of 1 lakh rupees may seem big, the inflation adjusted value is not going to be substantial. And this is one of my prime reasons on why I stay away from the traditional life insurance policies. Okay, let's see more. There is another part, okay, of this article which is talking about premium term life insurance schemes. So term life insurance are pure insurance policies that we talk about in our Money Gym program, and we recommend them, and so do many kind of experts talk about them, and mostly people won't buy them because you don't get any money back at the end of the term plan. So the insurance companies are smart enough. They identified that this was the problem, and they addressed the problem by actually introducing premium term insurance. And in premium term insurance, you pay a little more premium every year and you get your money back at the end of the term. Okay? So in a normal term life insurance, you are paying say about 9,000 rupees premium every year, and you're receiving an insurance of 1 crore for 30 years. And on maturity, you get nothing. So in a way, you say pay about say 3 lakhs in 30 years, and you get an insurance cover of 1 lakh, and you do not receive any money back. However, the return of the premium plan, now if you see, the premium is more in a premium term life insurance, which is 16,000 rupees. So in a way, you're paying about 5 lakhs. On maturity, you're getting a little less, say about 20,000 rupees less. Now, if the same difference that you are paying as a premium, okay, so This plan tells you that you're paying a little over 7,000 rupees. Now, if the same 7,000 rupees, instead of putting it in this premium insurance scheme, if you're actually investing that money, say in post office schemes, you'll make just a little over 5 lakhs, and well, I meant a little over what you receive back from this insurance plan on maturity. In, say, mutual funds, you will receive about 9 lakhs, and say at 10% plus, which can be in mutual funds, can be in stocks, you're making about 13 lakhs. Now tell me, why would you still go for such insurance policies? If you have a long-term horizon, would you still go for them? And if you will, why? Yeah, Bhumika, well, the answer to that is that there are tools which are available that we use in our Women on Wealth community to actually, kind of assess all this. That's the whole point of being financially educated. So guys, why would you still buy these? If you will. What are those stops that you have which would come in your way of actually taking a risk in equities than actually risking your money to inflation through these insurance schemes? Start sharing before we lose time. Bhumika, Hina, Ridhima, Jyoti, Preeti, Shriya, everybody who's watching, please start typing. Nilima, why would you still not invest? Like, what could come in your way? Could you start writing the barriers? Kavleen, the question is, given what you've heard from the starting of this video and now, and especially the insurance scheme that I just shared about premium insurance plan, what would still come in your way of beating inflation and investing in equities? What are those conversations, those barriers? Let's get conscious of them and start typing. Hey Seema, so type guys very quickly, we have just 6 more minutes to go. Okay, Neelu, hearing talk about safe options? I didn't get you. Like, you think that people influencing you to still go for safe options would be like a barrier? Yeah, okay, safe options are there. Okay, no barriers to investing in equity. Okay, Ridhima, got it. I quite liked what Neelu is saying, because I think in our world we have a lot of people who kind of drive us away, and there are a lot of myths which are there, which kind of surround us in our environment, and that come in our way of actually going ahead and making a difference in our own money lives. Okay, good, beautiful. And how I am decoding it, there'll always be influences And we got to have a financial plan that we've built with our own understanding, so that it can make a difference and really help us reach those financial goals that we want to reach. Got that, Shreya? Shreya has, it takes courage to say, I've invested in such policies. Thanks, Shreya. And she didn't even know how to calculate the actual rate of return. Shreya, it's great to see you in the Money Gym program then, making such a difference to your money life. Yeah, she's saying, now that I do, I won't ever pay another premium. Yeah. Bhumika, with equity, I can only see risk. Well, Bhumika, tell me, can you see the risk here? Tell me, is this looking like risk to you? Like, say if you're my age, say 35 years, and in 25 years, if your money just keeps lying, that 1 crore rupees that you've collected, it will become, even at a moderate inflation, 29 lakhs. Buddy, do you think that's risky? That's not risky? What do you think? Do share. Yeah, look at now, Kavleen is also sharing. I would definitely invest in equities, but, can you see guys, there's a but there. But, when it comes to large investments, we tend to go with investing in certain plans. And that's what actually, Kavleen, we need to learn. You know, one of my mentors told me that the moment but comes, जो but से पहले वाला sentence होता है ना, it is irrelevant. So actually for large investments, we are going with such plans even if it is actually eroding our wealth. So still we are not being the women on wealth, we are still women on erosion, financial illusion, all of that. Just sharing, yeah. Kavleen, my intention is that you grow financially, no matter what. Like I always say in my community, I have the ruthless compassion for each one to make it to their goals. That's about it. Yeah, so family could be, like, you know, Jyoti is saying, family could be a barrier. Because if they don't believe in equity, you know, you guys don't do your homework, learn, then you will start looking at it from the same point of view. Not investing in equity is a bigger risk. Like, compare the risk. You know how I see it is, if I've actually chosen great companies or mutual fund companies, okay, if I've chosen the right mutual funds or if I've chosen the right stocks, I'm going to make money. And you know, on this, I want to bring you to another article which I loved in ET Wealth, and that one is on investing in equities and how people think stock investing is trading. How people think that, you know, investing in stocks is just trading. And today I want to really break this myth with this article by Uma Sashikant, where she's mentioning that, guys, stock investing or investing per se doesn't need to be trading. It can be long-term investing, and when you actually do that, you can not only beat inflation but actually make money for those goals. But you need to learn how to do that. It can't be that you kind of come, just listen to the videos, listen to people, advisors, take their advice and just invest, because that way you will not definitely make money. So, and you know, here in this article, I love this line that I'm just reading, that, you know, how she's saying that equity is not trading in shares alone, it is so much more. While for a first time investor, we often think it is just trading, it's just noticing the ups, downs of the stock market, seeing the prices and kind of seeing all this hectic activity, looking at the IPOs, investing so that I can sell the moment the IPO comes out. And the moment listing happens, is that all that we need for reaching our financial goals? Is all that hectic activity really needed? And I've often questioned this, even myself. I'm not personally into trading at all. People who know me personally or have attended our programs with me, they know that I'm not into trading. I don't even have that mindset of, just short-term money making. Because there's nothing like that. You personally, I'm sure, know a lot of people who traded on hearsay, just wanted to make some quick bucks, and then that never happens. So, for long term, investing in equity, Uma is saying, is like every other risky long term decision. It's just like that. And a simple first time investor need not and should not trade. Like, that's not the way you start. You would hear so many stories of people who kind of do that and then say that stock market is a risky place to be, because at first we kind of jump to trading without even understanding it. Got it. Neelu is saying I'm such case. Got that, Neelu. Thank you for acknowledging. So there are better choices to be made. I'm not saying that you begin on stock investing. I'm just saying that there are, like Uma is saying, better ways, and boring as it may seem, index funds could be a starting point. ETFs, exchange trading funds, could be a starting point. And yes, of course, if you're investing in companies, then understanding if they are promise good growth in the future, if they are being managed well right now, if they have a great track record. So all of these and much more we personally see when we are kind of identifying stocks in our stock investing program and in our women stock investors community. So don't buy shares to just trade. That's another message. So today, there were two aspects to the decoding. One was inflation and another was equity investments and really the risk involved with them. So guys, just please start sharing what you're taking away from today's decoding. While I'm just going over some of the comments that I may have missed. Preeti saying things which may seem safe may not be so. They're just the traditional ones. Yeah. And we kind of assume that they are great schemes. Jyoti is saying she's investing her kids' corpus in stocks. And it just makes so much more sense since we are doing it for the long term. Risk is in investing without any knowledge. Yes, now that's risk. Without knowing your goals, without having a financial plan, knowledge. When you build your knowledge, when you build your mindset, the habits, they kind of help you go beyond risk. Ridhima, we will take up more decoding in the next decoding session, Facebook Live. For today, now I'm waiting for some of you to share what is it that you're taking away. Veena is saying she had a real good session today, so apt for the discussions going on at her home. She's supported. Absolutely, Veena. Thank you for saying that you're supported, because these lives are actually happening inside of this intention of supporting you become financially intelligent, become wealth creators. Neelu is saying, while investing is a science, trading cannot be foolproof, hence not a science. Got that, Neelu. Well, I would say investing is a mix of science and art and far more. Kavleen is saying, I still need to brush up my thinking as an investor. Got present to the butt. Kavleen, I love that. Thank you for sharing. I love this. I will surely discuss the same with my brother at home. Beautiful. Bhumika, go ahead, do that and go beyond your mindset of just sticking to safe instruments, because they are really not safe while the illusion may be so. And today, if your eyes have opened, you will actually start moving towards financial abundance. Long-term equity investment has to be done to grow our money. We have to take calculated risks backed by research. Absolutely, Preeti. On that note, guys, before I close, can I invite all of you to click on that share button and share this video? It is critical that each one understands the risk of inflation and takes appropriate actions so that they're not dying in poverty or they are avoiding the risk of not reaching their financial goals. So can you click on that share button and just share this video, because we don't know who could make a difference to their lives by listening to it. So once you share it, can you just say that you've okay? So Preeti and Rhythm are already saying that they've done that. Anybody else? We seek that support so that we can reach our mission, which is reaching out, making 50 lakh women financially educated by 2030, and it can't be done without your support. So thank you, Ridhima, Preeti, Kavleen, Bhumika, for sharing this. And on that note, just reading the last comment by Ridhima, she's saying, buy pure term life insurance without maturity benefits. Beat inflation with your investment, else money value will deplete. Equity has to be a part of your portfolio, your long-term investment. Got that. Shreya, thanks for bringing your sister in. And Jyoti, do make sure you share this with your mom and everybody in the world. Let's make a difference together, because it's only when we women come together can we actually raise the financial consciousness of our larger women's community. On that note, guys, take charge, stay safe, and do keep coming back. Tomorrow, Wednesday, 5 p.m., the Money Book Club is meeting, and I invite each one of you to make it, because money is an everyday activity. Working on your money life is not a weekend activity. Remember that. Take charge, and we are better together. Thank you. Bye-bye.